What is up, guys? It's Kojo Forest, aka GBP Emperor, aka Emperor of Blues. Today I come with you with a very brilliant, very detailed, very involving video titled How to Master Sniper Entry in the Lower Time Frame. This is one of the most important videos that I've ever shot for you guys on YouTube, because guess what? I'm delving into several concepts that you've ever heard about when it comes to trading on the market, and then demystifying the whole nature of lower time frame and how to even find trades easily in the lower time frame, right? So you really want to take some pen and paper, jot down every information that I put out, because it's going to be loaded and packed. And if you think that you're just going to be able to watch the whole video and then capture all the information I'm going to put out there, you're going to be mistaken. So yeah, briefly, just smash the like button, subscribe to this channel, and go grab yourself a pen and a paper, come sit down, and then let's get right into the business. So one thing you must know is that when it comes to lower time frame, we are talking anything under the 1 hour time frame. So it may be the 45 minutes, maybe the 30 minutes, 15 minutes, 5 minutes, or even the 1 minute time frame. But when it comes to me specifically, I try to find a balance between all this time frame that I've mentioned, and then that leads us to really focusing on the 15 minutes. So ideally, for an intraday time frame that makes up for scalping or day trading on the lower time frame, then you can really play anywhere between the 15-minute time frame. So for the purpose of this video, we're going to be using the 15-minute to do our trade analysis, right? So I'm going to be teaching you all the things that you need if you truly want to call yourself a day trader, a scalper, whatever it is that has so much confidence and so much authority on the lower time frame. Right now, remember, when it comes to lower time frame, there's so much going on in there, because if you're talking about a whole daily candle, right, it takes several 15-minute candles to come together to make that whole one daily candle, right? Several minutes of 15-minute candles put together to make that daily candle. And then even if you talk about a 4-hour candle, we're talking about 6 4-hour candles making a whole 1 day candle. So it tells you that there's so much activities going on in one particular trading day. And then once there's so much activity going on in one particular trading day, it means that on a lower time frame, such as a 15-minute, there's going to be so many patterns, so many formations, so many technical concepts that you've ever come across. But what if you do not have all these concepts in a chronological manner in your mind? You're going to be very displaced. You're going to be all over the place. You wouldn't even know how to start from where, because for once, you know that, okay, somebody taught me support and resistance. I'm looking for support and resistance today, but I'm not finding on the market. Does that mean there's no setup for me today? You're going to be all over the place. Or perhaps the strategy that your mentor, whoever you learned from, taught you was trend line, and then you sit by the chart and you're literally waiting for trend line setups, and you're not getting on an intraday basis. Perhaps you may have come across, learning, about order blocks, SMC concepts, whatever it is. But for that particular day in time, and then whatever currency pair you're watching, you're not getting that trade setups. That's what I'm trying to tell you, that as a lower time frame trader, you need to have all those chronological information that I'm going to literally list out there for you, well arranged in your mind, well informed, and then you can now tackle the market. Why I'm saying that is that on a day-to-day basis, you're going to be seeing several of these patterns occur. But once you have those patterns, those information, those knowledge, you can clearly sit on the market. And once you identify that this is the concept that is playing out, then you can apply that concept or that strategy to trade the market. If you see another thing, this is what is playing out, then you can be consciously aware and trade the market according to that. So without wasting much time and then without leading you on so much into the talks, let's get right into listing those necessary concepts and information that you need along your journey. First one is market structure. Right, so if you really want to do well in lower time frame, you got to really understand market structure. And market structure is very simple. It has everything to do with understanding what high high low formation, lower high low formation, and basically change in market structure. Right, so if you talk about high low, is the pattern of formation that makes up for an uptrend. Lower high, lower low formation is a pattern of formation that makes up for a downtrend. We have the consolidation phase. The consolidation phase usually characterized for a continuation in the pattern or a break of structure and change in direction in the market. I'm going to show you guys practical aspect of that, so don't worry. Next thing you got to understand also is demand and supply. Right, so when we talk about demand and supply, you can also call it support and resistance. I like to not make any differentiation between demand and supply, support and resistance. To me, they are the same thing. You got to master it. And then you got to eradicate the old school perspective of looking at demand and supply, and then adhere to the new school perspective, right? So in this video, I'm going to show you the new school perspective, right? The old school perspective is that we want to find several regions where the market has been bouncing off several times, and we call that place the demand region, or several places the market has been bouncing off, then we call that place the resistance region. But in a new school perspective, I'm going to show you something very brilliant, succinct, straightforward, and then it will change the way you understand supply and demand, or support and resistance. The next one, which is very important but less even spoke about in these days YouTube when it comes to even forex market, is the chart patterns. You also need to understand all the variations of chart patterns that there is, right? Talk about chart patterns, I'm talking about the head and shoulder. You have to be able to not only know them, but be able to identify them on the market. Talk about the head and shoulder inverse as well. Talk about the flag patterns, right? So flag pattern, we're talking about bearish flag, bullish flag. Talk about pennant structures, right? Bearish pennant, bullish pennant. Talk about wedge patterns. Talk about rising wedge, falling wedge. And finally, the triangle patterns, right? Which is like bearish triangle and then a bullish triangle. So you really have to have all these information right off in your head, and not only just being able to have them off in your head, but being able to identify and see them and trade them when you see them on the market. Next thing that you want to be so good at when it comes to lower time frame trading is trend line, right? So trend line has everything to do with even the way market structure plays out. So if you remember just briefly when I talked about as a market structure, for an uptrend we are looking at what? A high low formation. So because we have a rising highs and rising lows in subsequent manner, you can usually trace a trend according to that pattern and then have a trend line playing across, right? So it could be a bullish trend line holding off as a support on the subsequent build up, or a bearish trend line holding off as a resistance in the subsequent build down. You can also identify channels in the lower time frame. So channels can somewhat look like the flag patterns, right? But it's slightly different, because for flag patterns they are usually compressed, but when it comes to the channels they are usually like spread out, right? You can see that they are literally spread across, and then the market is literally trading in between, bouncing off support, resistance between those channels, right? So you have to be able to identify channels as well. Then you have to also get your hands fully on Fibonacci, because remember, the market does not trade in one direction. It goes up, it takes a breather, reverses, and then gathers momentum to go up, right? So within that brief phase of taking a breather and then gathering momentum to go up, it is literally making a retracement, which we traders can use a Fibonacci to measure that retracement level, probabilistic levels where it's going to what? Give us the information that market is likely to continue from here. And the next thing that complements so well with using the Fibonacci tool is the candlestick pattern. So if you really want to do so well with Fibonacci, then you also have to master candlestick patterns as well. So remember that I've been mentioning several lists of things. That's why I told you guys that if you really want to go so well into this video and then be able to understand everything that I'm saying, just take a pen and a paper and then jot everything I've been saying. So without wasting my time, I'm going to go right into the chart, identify on a chronological manner, just the way I've listed some of these patterns that I've talked about. Let's see how on an intraday basis, using the lower time frames, specifically the 15 minutes, we could have been, catching trade entries on this. Remember, I said it's one of the most important videos that I'm shooting for you. Already, if you're just soaked into it, then smash the like button. Let's get about 1,000 likes on this video within the first 30 minutes to an hour, and then make sure that you are subscribed to this channel as well. We've already been talking about lower time frame, looking at the market and making intraday trade decisions. So remember that when it comes to an intraday decision, you are literally watching at activities that happen in the market or that are occurring gradually in the market over the course of the day, and then you're using those information to find trade entries. It can be very daunting and very stressful process, right? So clearly, as you can see from the chart, I'm watching the pound Japanese yen, and then if you can watch this chart, you can see that I have this very thin vertical line cutting across here. This vertical line literally tells me that this market started trading from this way, so it's more like a period separator for the daily range. So it also tells me that this is the whole activity of this market from Friday. So Friday opening from the Asian session, traded this range, London session open, continuing up, and then the New York session just consolidating sideways, right? So that's just how the pound Japanese yen decided to trade last Friday. But how could you as a trader take advantage of this, right? And how can you interpret this information that is happening here to make any trade informed decisions? Remember that I've mentioned so many of these concepts. I've mentioned market structure, chart patterns, I've mentioned just various stuff, right? So for you to be able to make any informed decision in a particular setup like this, you have to really assess what the market is doing and then ask yourself that, can I break down this market using chart patterns? Can I break down this market first off, even with market structure? So what we're going to just seek to do is that we're going to be using the pound Japanese yen as a very typical concept of watching the intraday basis and then making informed decision to trade. So we're going to be using all the concepts that I've listed, and then as and when we see any one of them play out, then we're going to see if we would have been able to catch a trade using those reasoning. So yeah, we're going to be using the replay button to just quickly go on with this. Now, if I forward this one, I don't really see any reasoning around this range to give me the decision to sell this market yet. Because obviously we're still in that bullish market movement and the market just opened. There hasn't been any bearish reversals around this region to give me the information that we're going to sell around here, right? Yeah, we do break that region and then the market just starts trading all the way down. So it's not even necessary to have this here. Perhaps even put it up to this high here. The market literally just sells off. No reason to make any trade decisions, and then it starts to trade sideways, right? Now, if you remember what I just told you with respect to chart patterns, then you can clearly identify that here we are making some form of a bearish flag pattern, right? Or you can call it that wedge pattern. So you can clearly see that when we lower this onto, like, let's say the 5-minute time frame, then this one has been just, trading on and off, bouncing in between this region, and then goes up, comes back down, goes up, comes back down, and goes up. But one thing you must understand is that when it comes to that wedge pattern, when you have like a bearish wedge, which means that the market actually started selling off before it started with that wedge pattern, it usually has a continuation onto the downside, right? So with this example, let's see if indeed this market does break down onto the downside.